Hello, I would like to show you how to complete some of your chapter exercises. So in this video, I will show you certain exercises that will be similar to your exercises, but not the exact same numbers. So you can use this as a guide to help you understand how to complete these particular homework exercises. So the first one we're going to look at is similar to your exercise 1-9. Here you're going to determine the missing amount. So you will recall that the accounting equation is assets equals liabilities plus equity. So based on this equation, all we have to do is know one side or the other. So for the first one, we know that liabilities plus equity equals assets. So we're just going to add 145 and 47, and that will tell us what our total assets are, 192. And the second one, we know what the assets are and liabilities, but we don't know the equity. So all we'll do is take 120 minus 58 to get 62. And in the last one, we know assets and equity. We need to find liabilities, so we'll simply subtract the equity from the assets to get 151,000. Now we're going to look at exercise 118, and we'll go through the whole series. So it's 118, 19, 20, and 21. Here we're looking at this person, Jasmine Ernst, who organized a firm called Ernst Consulting. On December 3rd, the owner contributed $71,500 in assets in exchange for common stock. Then we're looking at the end of the month. We want to prepare the financial statements. So we have these accounts and balances, and the first one we will prepare is the income statement. The income statement always has to be prepared as the first financial statement. So one thing you will hopefully recall is that the items that go on the income statement are the revenues and the expenses. So all of these items here will go on the income statement. You also need to put the date for the income statement. The income statement covers a period of time. So in this case, we're looking at 1 month. So this one will say for month ended. Another alternative would be at the end of the year, and then it would say for year ended. So recall the items on the income statement will be your revenues and your expenses. The difference between the revenues and the expenses is our net income or net loss. Hopefully we're not having a net loss. So this company has only one revenue, consulting revenue, and then they have 4 expenses. Now we need to total the expenses. So just adding up these items, we get $16,050, and then to get net income, we just subtract $16,050 from $25,000 to get $89.50. Now the next financial statement is the statement of retained earnings, and we need this number for that next financial statement, and that's why we have to prepare this statement first. So now we're looking at the statement of retained earnings. Again, we have to list the date. This one also covers a period of time. So this one says for month ended. Don't forget to put your dates in at Connect. So this financial statement shows how we went from our beginning retained earnings balance to our ending retained earnings balance. Now this company just started, so they don't have any beginning retained earnings balance. The reason we had to prepare the income statement first was because we add the net income to the beginning balance of the retained earnings statement. So recall that number was $8,950. Next, we subtract our dividends, which are $2,000. So retained earnings beginning balance of 0 plus net income of $8,950 minus dividends of $2,000. Then that is how we determine our ending balance of $6,950. Now the next month that they prepare this financial statement, instead of having 0 here as the beginning balance, the next month's beginning balance will be $6,950. Now this $6,950 ending retained earnings balance is used on the balance sheet, and that's why we have to prepare this statement prior to the balance sheet. So now we're looking at the accounts that go on the balance sheet, which includes our assets, liabilities, and equity. Remember, the accounting equation is assets equals liabilities plus equity. So all of these items are here are our assets. Now it is important to list these in a specific order, and this is the correct order. You will learn it more in chapter 2, but it's called order of liquidity. How quickly can they turn this into cash? So our cash is already cash. Accounts receivable are easy to sell. Office supplies are relatively easy to sell. Land is going to take longer. That's why it's listed here. And then office equipment. Now we're going to get our list our liabilities. We only have one. So we have accounts payable of $5,000. Now we get to our equity section. So common stock is here, the $71,500. And then our ending retained earnings balance from our statement of retained earnings, which is composed of all of these items, because remember the net income also was included in the statement of retained earnings. So our ending balance was $6,950. Now we're going to get our totals. So our assets total $83,450, and our liabilities and equity also equal the same amount. Now the next statement is called the statement of cash flows. In order to prepare the statement of cash flows, we have to have some additional information, which you can see on here. So remember, the owner contributed $71,500 in assets, but we need to know a little more detail about that. So $43,500 of that was in cash, and $28,000 was land. When we're preparing the statement of cash flows, we are only looking at cash inflows and cash outflows. So that's why we needed this additional information, because we are only looking at which of these items have to do with either cash flowing into or out of the business. The next item says that the equipment was paid for in cash, so that will go on this statement. Okay, so now we need to look at this accounts payable. Item C says the accounts payable balance of $5,000 consists of $1,200 from the office supplies, which means we haven't paid that yet, and $3,800 in employee salaries that have not been paid. So here's our salaries expense, $10,000. Well, we paid part of that in cash, and part of it we haven't paid yet. So the $3,800 that is still in accounts payable is not a cash item. The difference between $10,000 and $3,800 is how much cash we have paid in salaries to our employees. So only that difference amount is going on this statement. And it says rent, telephone, and miscellaneous expenses were all paid in cash. And no cash has been collected yet on this $25,000 in revenues they've earned. Remember, they've earned it because they provided the service, even though the cash has not come into the business yet. So now we're looking at the statement of cash flows. This one is for a month. So let's look at the statement of cash flows. We have 3 separate sections. we have cash from operating, cash from investing, and cash from financing activities. So the operating activities section are the company's day-to-day activities in earning their revenue. Investing are long-term purchases for cash, long-term assets. So remember, they purchase that equipment that will go in investing. Financing are the owner's activities. So when they sell stock and when they pay dividends will go in the financing section. And then we will end up with our ending balance. So this cash balance right here, $11,250, that is what our ending cash balance will be. So we've already got a check figure for that. So remember, we have not received any cash from our customers yet. So there is a line item for that, but the amount will be zero. Remember, the amount cash paid to employees is a difference between the $10,000 in salaries expense and the amount we haven't paid yet, the difference between those two. Also notice that this is cash paid. So this is in parentheses showing a negative amount. Cash paid for rent, telephone, and miscellaneous. Now we want to get a subtotal. Notice that this says net cash used by. The reason is because all of these numbers are negative, meaning cash paid out. So this subtotal for this section is going to be adding up all of these cash paid out amounts to get $12,250 cash paid out. So the investing is that one item, a long-term asset that we purchased with cash. That also is a minus because it's cash paid out, and we have a subtotal of the same amount. Then we have our financing, the issuance of stock. So this initial investment was $43,500 in cash. So that's how much cash will be listed for the common stock. And this is a positive amount because this is cash coming into the business. They paid cash dividends of $2,000, so that is going to be a subtraction. Then this row says net cash provided by, because we have a positive $43,500 coming in, $2,000 going out. The net difference we will subtract to get the net cash provided by financing of $41,500. Now we need to combine the three subtotals. Notice we have two that are negative amounts. We want to add those two together and then subtract from the one positive amount. That will give us our net increase in cash. And remember, we started off with zero because this is the first month this company has been in operation. So the beginning balance was zero. So net increase in cash of $11,250 plus the beginning balance equals our ending balance. And remember to always make sure that equals what your ending cash balance is. This concludes the video for Chapter 1 exercises. And keep in mind that these are called alternative because they're similar to your homework, except the numbers are different. But you can use these as a guide to help you complete your homework.